Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news away from the guns and hatred consuming the US at present. Our challenge is to keep it out of our society. Markets had been waiting for the American August CPI inflation data, and it came in higher, although no more than expected. It rose to 2.9% in August, the highest since January, after holding at 2.7% in both June and July. Prices rose at a faster pace for food, up 3.2%, and energy costs rose for the first time in 7 months. On a monthly basis, the CPI there went up 0.4%, the most since January, and above forecast of 0.3%. Rents rose 0.4%, the largest upward pressure. On the other hand, core inflation remained steady at 3.1%, the same as July and at February's peak, while core CPI inflation rose 0.3% month on month, matching July's pace and market forecasts. In a stable world, this level of inflation would not bring market expectations of a Fed rate cut next week, but there are widespread expectations of one anyway. And that is because their labour market is weakening, and quite fast now. Initial jobless claims in the US came in sharply higher last week at 263,000, a 4-year high and well above the expected high level of 235,000. In actual terms, they only rose 205,000 when a solid end of summer holiday seasonal decrease was expected. There are now 1.815 million people on these benefits, 110,000 more than the same time last year. Also getting much worse, much faster, is the US federal government finances. The US budget statement was expected to hold at a very high $290 billion monthly deficit, but it has blown out to $345 billion in August. And this is after collecting $30 billion in tariff taxes in the month, $165 billion so far in the fiscal year. Whatever way you look at it, the US economy is being mismanaged on a massive scale. Too much inflation, too little job creation, too large tax avoidance by the uber-wealthy, and self-imposed tariff taxes on themselves. And unfortunately, their social programs are making things worse at a fundamental level too. New independent analysis shows that the long-held view that American demographics would remain very positive to the end of the century have suddenly turned. Now, US deaths will exceed births by 2031, far faster than expected. And the deaths will rise quicker until 2055, when they will match immigration. And these estimates are before the Trump-Kennedy health mistakes, which will undoubtedly speed up deaths, and the Trump heavy-handed immigration crackdowns that will likely mean the immigration assumptions are far too optimistic. If demographics are destiny, the destiny of the US looks grim, and we can no longer hold the assumption that it will be a major power by 2100. That is a sharp change from the demographic outlook just a few years ago. And new data out in Canada shows Canadians are wealthier, with an increase of over $250 billion to $17.9 trillion, the 7th consecutive quarterly increase. This wealth accumulation happened despite headwinds of global trade pressures and a weakening economy. Per capita GDP in Canada is now 76,100 Canadian dollars or 92,000 New Zealand dollars. Across the Pacific in Japan, producer prices there rose 2.7% in the year to August, up from a marginally revised 2.5% increase in the previous month. This data doesn't really add stress or new factors for Japan. A year earlier, their producer prices rose at a 2.6% rate. In China, new vehicle sales recovered in August, up 10.1% after the unexpected 10.7% fall in July. New vehicle sales are expected to grow 4.7% in 2025 to almost 33 million units, from 31.4 million units in 2024, with the new energy vehicle sector surging 24% to 16 million units. That will keep it almost twice the size of the US vehicle market. China's car market is a global Goliath. The US vehicle market is running at 16.1 million annual sales, a dip in August from July. In Europe, the European Central Bank kept its 3 key interest rates unchanged, with the deposit facility rate at 2%, the main refinancing rate at 2.15%, and the marginal lending rate at 2.4%, all as expected. inflation remains close to the 2% medium-term target, and the outlook is broadly unchanged from June. New staff predictions see headline inflation averaging 2.1% in 2025, easing to 1.7% in 2026, before rising slightly to 1.9% in 2027. And occasionally we check in with what is happening in Turkey, an authoritarian regime that has made massive mistakes with capricious monetary policy moves and is paying the price with tough consequences. The Central Bank of Turkey cut its benchmark interest rate overnight by a surprisingly large 250 basis points to 40.5% in its September meeting, its lowest since 2023. The move follows signs of slowing underlying inflation in August, although food and services prices continued to pressure inflation. Domestic demand there remains weak. In Australia, consumer inflation expectations rose to 4.7% in the September survey by the Melbourne Institute, from August's 5-month low of 3.9%. The increase came as stronger domestic demand raised concerns about renewed inflationary pressures, with household consumption proving resilient in the second quarter. This is the sort of news the RBA will not welcome. No rate cut is priced in for the September 30th meeting, but one is projected for the November 4th, although that might get reassessed now. Global container freight rates fell 3% last week from the prior week on very much weaker outbound rates from China to Europe. Interestingly, though, outbound rates from China to the US West Coast actually rose by 6% last week. Bulk cargo rates rose 8% over the past week to be 8.5% higher than year-ago levels. The US Treasury 10-year yield is now at 4%, down 3 basis points from yesterday at this time. And the price of gold will start today at $3,635 an ounce, down $10 from yesterday. And American oil prices are down $1 at just over $62.50 a barrel, while the international Brent price is similarly lower at just on $66.50 a barrel. And the Kiwi dollar is now just over 59.7 US cents, and up another 20 basis points from yesterday. Against the Aussie, we're down 10 basis points at 89.7 Australian cents. Against the euro, we're up 10 basis points at 50.9 euro cents. That all means our trade-weighted index starts today at just over 66.8 and unchanged from yesterday. And the Bitcoin price starts today at $114,552 and up 0.7% from yesterday. Volatility of the past 24 hours has been low at just over plus or minus 0.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.